All right, talk to us about the general performance of the market today. A bit more of a positive sentiment starting to creep through, but not major gains.
Yeah, well, Uchumi came back to the market, so that reassured investors that there's perhaps a floor, a safety net, if you will, for the investments. So they're a bit more willing to take a bit more risk.
All right, talk to us about that listing, because, it's been one of those controversial ones. The CMA has taken a long time to sort of look through their credibility and ability to stand the test of time on the NSE. This is a company that once was listed and around 2006, due to huge liabilities, had to withdraw.
Yes, it had. I think it was the first time I've seen a board declare its company insolvent. And perhaps up to a level you could understand CMA's apprehension, but I think they took too long, because at some point it was obvious that Uchumi was perhaps more healthier than some of the companies that are already listed in the market. So we wish they would have done this a bit faster, but they came through in the end, and it's trading now.
In terms of investor interest, what sort of a listing is this? Is this just an introductory listing to get a share price? Are there shares trading?
Well, they have traded. I'm hesitant to call it an introduction. It's more or less of a suspension lift. So that's precisely how I would describe it, because it was suspended and now it's trading. The share is still going through price volatility, because it's trying to discover itself. So that might continue for a while. We've got some debentures due for conversion, so that might bring through some dilution. But once all that is done and they announce the results in perhaps September thereabouts, everything should be, the direction of the share should be easily more discernible.
Obviously, before you had the Mandaraka holiday, the Central Bank of Kenya made its decision to raise interest rates at its MPC meeting. Has that started to filter through? If the market is positive, is it because of that decision?
Well, I'm not even sure what to make of it myself, because they also lowered the CRR.
Yeah.
It's difficult to know whether they're looking to manage prices or to secure low-cost funding for the government. But interest rates I expect to continue trending upwards, and so at some point that will start pulling funds away from the equities and into bonds, where there'll probably be better returns. The 71 day, I think, then the 91 day has gone above 7%. I will expect the 182 to follow suit, and the 364 thereafter, and perhaps everything else. So the upward trend is still very much alive. And I fear if the central bank is not more proactive in containing price inflation, then we might even see higher rates, and we're talking about rates higher than what we were seeing in 09 and 08.
You mentioned the CRR. Let's talk about their decision concerning the cash reserve rate and how that's going to impact on lending in Kenya, because prior to the inflationary situation, the CBK was really intent on supporting public sector credit growth in order to fuel growth in the economy in general.
Yeah, well, I know some economists who would argue that that's the wrong way to go about it, but that is a policy I think they have taken, and to bring down the CRR was supposed to sustain liquidity in the market, which I'm not too sure about its efficacy, because if you look at the balance sheets of our major banks, they're pretty liquid, but that money is not really filtering through to the real sector, and simply because they're not too sure about about the sustainability of the economic performance. So I might think that there'll be moot. There's just sustained liquidity in the market, but whether it will lead to lower cost borrowing, I'm not too sure. I'd have preferred they would have just tightened further and brought prices under control first. So because I mean the uncontrollable rise in prices, which I think partly is driven by a money supply, as much as the IMF also hold that view. I think that is a more pressing concern, especially for the central bank.
Okay, let's talk about a report out that says that private sector lending in Kenya at the moment is faster than state borrowing. We've got a finance minister due to release his budget next week, and we're expecting to see a lot more government borrowing. What's your expectation?
Well, with the kind of budget, you're talking about 1.15 trillion, and last year's estimates, KRA is probably not going to meet them. So I think that the gap between government spending and tax is going wider and wider, and for me that's becoming more and more unsustainable. And I don't know how long that can be sustained. So I'll probably be looking out in the markets to see where the pockets of risks are, so that you can protect yourself accordingly. But the issue of too much debt played out in many economies. It's not working out too well for Greece. Neither is it working too well for US. Throughout history, we saw Canada deleverage at some point, so it's possible to recover. So did Latin America, but it still gives room for concern.